All right, we're going to take a look at the August 11th supply-demand preview here. This is going to be, of course, out next Thursday, and this will be a big one here. As you can see by the title of this little preview slideshow, we're going to call this Estimating Damage. So simple fact is this is going to be the first report that USDA does where they actually will do some in-field work looking at the actual crops in the fields here. Of course, this will be mostly a corn-based report as far as a focus, but it certainly will be something providing a lot of movement for the market to look at here. As you can tell by the picture, we have some pictures of some ears that customers sent us, and of course the ones on the far right, the far three there, do show some things you hear about in the industry, tip back, etc. And those are generally a problem with pollination here. And of course, we'll talk about that here in just a little bit here. But before we get into the issues affecting new crop, we've got to keep in mind USDA will make some changes to their old crop numbers as well. As you can tell by this chart showing ethanol production, you can tell about the last three dots on the right-hand side. Each have been a bit lower here. In fact, than the last 2 months before that here. So we do have a lower ethanol production rate right now. This will affect some issues here with our balance sheet, and we do expect USDA to lower their estimate of ethanol production here on next Thursday's report. In addition to some lower ethanol pace here, we do have to point out that corn sales, as far as export sales, are also having some trouble. You can point out the last 3 weeks of export sales have all been clearly below this blue line, which is, of course, the average, a 5-year average line here as well. So we do expect not only some problems to be recognized as far as ethanol, but certainly also on the export side as well. Now we could talk about this new crop issue here. Now a lot of people also have a lot of questions about, well, what is USDA actually doing in the field? Is this an ear count only survey, or whatever type of issues will they be looking at here? We got to point out USDA has only one survey method. They don't have a separate method for August or September or October. They are first going to go in the field and make a maturity estimate here, and they have 6 classes of maturity that they do look at here. If it's an early maturity, as you can tell by here, this is only going to be an ear count issue here. Depending on where the region of the U.S. That they're in, they'll also do some additional steps. They may do some kernel counts in the field itself, or if the crop is well advanced, they will actually cut the ear off, send it to a lab. The lab will weigh the ear itself and make an additional adjustments according to issues like moisture. Also the kernel fill problems that we had in the past year, those type of issues will also be recognized as well. And at this time of year for the August report, certainly the vast majority of USDA survey will be mainly an ear count based survey. So keep in mind, we won't recognize the full extent of this problem here on this August report because the pollination problem here this year will only be shown by kernel counts or actually a full lab analysis here. Now, with this in mind, we will recognize that USDA is going to make a move in terms of yields. As you can tell by this chart showing the change in yields in the past few years, you do see USDA is pretty active here. Now, this shows all years, not necessarily hot years. Let's kind of separate some of these issues out separately here. Now we know that this year's pollination was hot. In fact, as you can tell by the red bar here, we were actually 4.5 to 4.8% hotter during pollination. This is covering Illinois by itself than all these other years on this chart going back to '93. In fact, this is the hottest pollination since the early '80s. You finally get, in fact, you got, I believe it was '83 and probably '88 were the other two hotter pollination years, and we'll show that here in just a little bit. But in terms of the extent of what we need to focus on, let's focus on the hot years, and we're going to keep some of these numbers in mind, this 2002 and also this '95, other similar type of hot years. Now I mentioned this is the hottest year, or hottest pollination in quite some time. This chart stacks up all the other hot years of pollination, not the cool ones, all the other hot years, and let's look at 2011 in relation. As you can tell, this is actually the third hottest pollination we've had since 1980. quite an issue here, and USDA will make some changes on yields. Not only was this year a heat issue here, we do have to point out there was a moderate drought which showed up in the second half of July. Here's the drought monitor, which is a longer-term drought-based indicator as of July 5th. And let's look at it currently. This is the latest one as of August 2nd. Does show some very light portions of drought in actually many areas here in the Midwest, mainly Illinois, southern Iowa, a good chunk of Indiana, and certainly Missouri. That drought from the southern plains has creeped into Missouri. So we know that we've got not just heat, but also dryness, which is going to be an issue affecting yields here. Now let's take a look here as far as the numbers from the past heat years, which are shown by the red bars in recent years, and what USDA did to the yields in those years. We can point out that 95 was kind of an anomaly where we had a very hot pollination, but also saw USDA increase yields. We got to keep in mind that 95 was quite a strange year in USDA's methodology. What they did lower the crop size, but not on the August report. They made some lower numbers after August in 95. But certainly 97, as you can tell, and certainly 2002, which they made some severe declines here, 7.5% from the July report. So keep in mind, as far as the effect we should be looking at, this actual heat year in 2011 was much hotter than 2002. So we're not actually expecting a full 7.5% decline to show up here, but we will point out there's going to be some problems here. And we are looking for a drop down to 155.2 from USDA's 158.7 yield. We do look for further reductions in yield. Our ultimate current estimate is 153.6. Now, as far as this moderate adjustment we're expecting here in August, we can point out that as far as stocks, we will see USDA make some adjustments. Old crop of 880, as I mentioned before, we expect USDA to lower usage a little bit and increase the old crop ending stocks. However, the net effect on new crop will certainly be more production related. The changes in yield and acres will more than offset the lower old crop demand issues here. As far as soybeans, old crop, we will see some changes here as well. Here's a chart showing our estimates for exports. Keep in mind we have, obviously, as the orange bars show us, the amount of exports that we've actually shipped out year to date are certainly higher than last year at this time. There's no surprise with that. We do have a few weeks left during August here to finish out the marketing year, and you add on those our expectations for August shipments, as well as a small adjustment due to donations. We expect realistically you might have maybe a 1.5 billion bushel estimate here, and that's a full 20 million bushels less than USDA. So keep in mind, as far as this goes, the numbers we're looking at right now suggest a slight increase in ending stocks. We're not going to go this full 30 million bushel discrepancy between us and USDA, but we will recognize some of that here. In terms of new crop, USDA does make some moves during August to yields in as far as soybeans as well. They're not as dramatic typically as corn because, as we all know, soybean yields are generally made in August, where corn yields are generally made in July. In terms of recent years, really a 3% change of the high end of things. Of course, 2002 was a little different scenario. We do expect USDA to make some to recognize some of these issues. We're looking for a yield decline to 42.0 from the current 43.4%. That's actually just a little more than a 3% decline here. But bottom line, as I mentioned, with a slight increase for old crop, moving that up to 205 million bushels, the biggest issue right now is that decline in yields, which we do expect to happen. That'll bring the new crop ending stocks down to 154, which, as you can tell by previous years, this is not really a tight type of number here for soybeans, but it is something. But it is certainly a change in the mindset. The current mindset is that corn is leading the way in terms of the market, bullishness here, and certainly that soybeans are dragging their feet. This will help maybe change some of that direction here. Maybe help soybeans get on board as well. Now for wheat, we've shown this chart in many of our wrap-up comments, and I just have to put it on here because it is so important for us to monitor. The past 3 weeks of wheat sales have literally been terrible. In fact, the last 3 weeks, you're looking at about a 50% decline from normal. Normal shown by the blue line here. So it's obvious that these Baltic Sea, these Black Sea exporters, meaning Ukraine and Russia, have taken over this wheat market, and in my opinion, it certainly hit much worse than USDA expected here. So with this in mind, you should expect some problems develop on this balance sheet as far as demand side. Now, do have to point out for wheat, we do expect actually some adjustments to be made on production as well. We do have some yield declines, a small yield decline plugged in on our balance sheet, and a full 80 million bushel reduction here for production. However, due to the problems I just noted before on this export side, we expect exports to be adjusted by a full 125 million bushels. That may not happen all in this report, but it certainly should be shown in the next 2 or 3 reports. That's how aggressive this problem is with wheat exports. So bottom line for wheat is you should see an increase in wheat ending stocks going from 670 to 703. Now, this report is out Thursday, August 11th at 7:30. We've got quite a deal to talk about, and certainly quite an impact this could have on the markets during that time. Feel free to give us a call here, either before or after the report itself, and we'd be happy to go through the numbers, how this affects your operation, and also what type of changes you need to make as far as marketing or with trading. Keep in mind, we also will be making maybe some adjustments on the price expectations that we've talked about in previous reports as well. So we certainly look forward to talking with you, and let us know if you have any questions. 1-800-262-7538. Thank you.